Hello. There is a company that is trending right now. It's called Gigacloud Technology. A lot of people flocking in this one, and it is down today, almost 28%, with the rest of the market being severely down. But you will notice that this company overall has been up more than 200% in the last few days, frankly, because if you take a look at the 1 year low, it has been 283% since that. But the thing is, this is a very new IPO. It started at 18th of August, and so it actually opened up at 19 and closed at 15 that day, but then actually rose to 48 or 48 over here, and at some point it was even 60 for the day. And so it's going up and down a lot. Okay, today is down, but it has actually climbed up a lot since its IPO day. And the thing is, we can take a look at the company profile page here, and it tells us that the IPO date was the 18th of August here. And the company has about 700 employees, and it is a end-to-end business-to-business e-commerce solution for large parcel merchandise here, connecting Asia with resellers in the United States, Asia, and Europe. Now, this company is a Chinese company, so bear that in mind. It may have the usual issues that China has these days, but it could go well in the future, I suppose. Now, we do want to take a look at the metrics, though, and kind of discover whether this could be an interesting buy for a long-term hold. It does have a price to earnings ratio of 25, and again, we don't have enough information here. This is a company that actually IPO'd like 4 days ago, and the PE ratio is not that high, but the price to free cash flow is high, meaning that the company is actually not generating enough free cash flow to justify their relatively low PE ratio, so the price to free cash flow is much higher. Now, no dilution yet, but you will notice that in terms of total liabilities to free cash flow, again, the company doesn't generate too much free cash flow, but again, it's like in its early days, and generally speaking, has been doing well in terms of revenue growth, net income growth. You will see here, free cash flow growth has been going down recently. Again, this may have a lot to do with China, frankly, and in terms of the 5-year total equity growth, again, it's growing, and these are interesting metrics to see. The company has a nice return on equity here, net income margins of about 6 to 7%, at some point it was higher, as you will see. And we can also take a look at the financial statements just to take a little bit of get a little bit of a sense of what has been going on. Again, not too much information here, but we do have some before its IPO days. That's 122 million pretty much to 414. So the company has been climbing at about 100% every year, maybe 80 to 100%. And in terms of the net income, 2 million to 29 million, almost 30 million here. So again, climbing a little bit, but last year wasn't the best for them. Now, if we take a look at the balance sheet of the company here, you will notice that the total equity of the company has been increasing as well, which is something that we like to see. Slowly increasing the total equity. Again, it's a very small company. We can quickly go back and take a look at the metrics page. You will see that their market cap is 2 billion, which is not that small. But remember, that has a lot to do with the climb in terms of the stock price. The market cap is about the price of the stock. So if we go back, let's take a look at the cash flow statement, and you will see here that the net cash from operating activities here has been less in the last year, but generally speaking, increasing generally. And in terms of free cash flow, from some thousands to 6.7 million, it did also 32. Now again, this may have to do with a slump that we had in China for the past I guess a year and a half or so. So yeah, this kind of drop may have to do with that. So it's not really worrying me too much. But what I do want to kind of take a little bit of a look at, first of all, I want to check the news. Do we have anything in terms of, actually not the stock market news, that's the news for the company that I want to check, so the stock news here. And you will see that Gigacloud stock surges, shares of meme, old-timers, AMC, and GameStop tumble, which we will talk about in a different video, in a separate one. But articles are warning, again, not too many articles here indicating that the company is still in its infancy here, at least in terms of the stock market. Is it too late to buy? Gigacloud joins Wall Street parade of China meme stocks, but is this really a China meme stock is the thing. And some people say here that this could be the next 100x stock. And this doesn't really look to be like a meme stock, frankly, in terms of what they are doing and in terms of how it's valued. Although people do buy it a lot, and it's still going higher and higher. But in terms of its financials, it's not that terrible. Because if you take a look at, let's just say the last year, which was a little bit more representative of what the company would be doing, was like 30 million here. And yes, the company is valued at about 1.9 billion. I think it was like 2 billion right here, so it is expensive for sure. But what is this multiple? It's like a 60 in terms of the free cash flow. Again, if you take last year's free cash flow, not 2 years ago free cash flow, not last year. Last year's free cash flow, because it was much less, it's 284. But overall, it looks like the company is not that bad in terms of what they are doing. Now, we can actually gauge that much better by using our stock evaluation tool. Of course, it's much easier. Now, again, this is a very new IPO, and we're missing some revenue growth numbers, but it's very easy to deduce from the revenue here. It's about 80 to 100% that they have been doing. So we're gonna go relatively high, 30, 40, and 50 here. In terms of the net income margin, it has been around the 7 level, as you'll see. The net income margin 7.67 has been at about the average. So we're going to go 6, 7, and 8 here. And in terms of free cash flow, again, we cannot make a safe assumption here because it's been going up and down a lot, as you can understand. I think this year is probably the most representative one, so 80 and 90 and 100 and 13% for our annual return. We could even go 15 here. Let's see what we get if we hit calculate. And we are looking at a company that is expensive. Yes, it is expensive at its current price. But first, two things. It wouldn't be that expensive if it was like 2 days ago when it was much lower, because it has climbed like 200% in these like 2 or 3 days. And it's not super expensive as well. So it's not like you are looking at a company that's like has a high projection of like $2 and its current price is like 48. So it's still expensive. Don't get me wrong. It's not a buy right now, but it's not that horribly expensive. And again, if it falls again, if it has like a steep down then, which it could, these kinds of companies, these kinds of like high flyers basically, can go down quite significantly and maybe come up again. But if it goes down quite a lot, maybe to $20 or something of that sort, maybe, just maybe, it would be an interesting potential addition to portfolio here for the long run. Again, a riskier play, of course, but if we can get these IPO companies at a little bit of a very cheap price based on what they are doing, maybe, just maybe we can get a company that is gonna do well in the future. Now, again, a couple of things to notice about this. This is a Chinese company. It's a very small company. We cannot be safe with the numbers really, so I'm always a little bit scared about Chinese companies. And so this has all the characteristics of a potential lottery ticket as well. It is a trade, I should say. It could be a long-term sort of like trade, but I wouldn't like necessarily think of it as a company like Facebook that I'm buying, like Meta or Google. It's a completely different thing, this one. I don't know whether it's gonna work out. And if I'm buying this one, I'm not buying too much, of course. I'm buying just a little bit and holding it, maybe just holding it for a while, just to see whether it will actually have a climb here, and maybe I can actually sell off a huge climb. I wouldn't buy it now. Now it has already moved up quite significantly, as I said. Remember, it was like $15 over here, so it has moved significantly, like almost 300% here. And so I wouldn't buy it right now, but I would definitely think about potentially adding a little bit if it goes down significantly, and then just get it again, sort of like as an intermediate, sort of like a little bit of a lottery ticket and a little bit of a trade to potentially even hold for a little bit of a longer time, see how that plays out. Again, I wouldn't go, of course, overboard, because this is a very risky one, and we could even have used a 15% in terms of our required return here in our stock evaluation tool, that is. But still, the company is expensive for what it is right now, regardless of whether it's an IPO or not. Now, if we're looking to buy this and hold for a longer period of time, I would definitely urge you to wait it out, see how the next few quarters will be for the company. Come back, analyze it, see its financials till we get more data out of it. Maybe think about it in the next year or so. Just let it roll a little bit, see how that goes, and maybe over there you can actually add it to your portfolio and be a little bit safer, and you're probably gonna be getting a better price as well in a year or so, I'm assuming. But we don't know. Maybe this is gonna be a high flyer, or it's gonna end up being a meme stock, who knows. But thank you for watching the video. If you are new around here, please remember to leave a like. That helps a ton. And of course, if you're interested in joining this tool, you can join our company. You can become a patron and get full access to this tool. You can find a link in the description box below this video. And also, please come over and join us in our Discord channel. You can again find the link in the description box below. We talk about all sorts of different companies pretty much daily in there. It's a nice place to be around, and we'd love to see you there. And also become a subscriber if you're not one, of course, that goes without saying. And in the meantime, if you're interested in Alibaba, you can take a look at the video that I made a little bit earlier, in which I'm discussing the curious case of multiple funds actually buying more of Alibaba shares, and pretty much China, that is Asia, actually quadrupling their holdings in Alibaba. An interesting video to watch just to get some ideas there. And again, thank you for watching, and I'll see you in the very next one, guys. Bye bye.